Hey, what's up, guys? John here. Many more economists are now stepping out saying that they expect a recession, and some even calling it a depression or a collapse. I personally think we're going to be stepping into a once-in-a-lifetime opportunity to invest and to grow one's wealth, but we have to pay very close attention to what's happening behind the scenes. I find a few things very unique and interesting. Look at Airbnb. Airbnb stock today, it was sold out just by insiders, people that work directly at it. Airbnb, they have stock. They were all sellers, net sellers. There was not a single share that was purchased of Airbnb from people that work at Airbnb today, which is very unique. It's interesting. It's very unlike anything we've seen over the last 12 months. Look at Elon Musk, sold over $40 billion in Tesla stock over the last 12 months. In Q3, Q4, a lot of the wealthiest people in the world, they were all net sellers of their own stock. And I personally think it's all for a reason. I think people are just sitting on cash. They're looking for, opportunities. And it looks like these opportunities are going to be coming. At least that's what it seems, because nearly half of the U.S. population is anticipating a recession in 2023. Nearly half of the population is anticipating this. And we're seeing home builders and home builder permits plummet as interest rates rise, and people start to, question, these developers are questioning, what is the future going to look like? We're paying record prices for land, we're paying record prices to develop and build, we're paying record prices for labor, and we're wondering what the consumer is going to look like, as they step forward. Are they going to be able to qualify and get the financing to purchase the products in which we're selling? And many builders are simply saying, the risk, not worth the reward. We're going to pull back. And so we look at what's happening. We have to all pay close attention so we can make smart decisions. Please hit the like button. When you hit the like button, YouTube is going to share this content to educate more people about what's really going on. Today's paid sponsor is useItorloseIt.vip. They believe that they have a solution that's going to be better than real estate, stocks, and crypto combined. They believe that they have an incredible opportunity to where you can invest your money and protect and preserve your capital and grow your capital during these uncertain times and invest it like the 0.01% are. So useItorloseIt.vip. You can find more information in the description below this video. More economists say a recession is likely. Economists are predicting a 70% chance the U.S. enters recession next year, according to the latest Bloomberg survey. The odds are up from 65% recession prediction in November and 100% prediction in June from previous Bloomberg surveys. We look at what this looks like. October 17th, it says forecast for a U.S. recession within year hits 100%. And October 5th, 96%. So within basically 12 days, not even 2 weeks, it went from 96% to 100%. And before that, 98%, 72% in August. So you can just see the trajectory of where this is all going, right? More and more people and more economists are coming out with this forecast. And everyday consumers are simply feeling it when they go, fill their gas at the pump. When they go spend money on everyday purchases, they're really feeling the pinch as everything gets much more expensive. And with shrinkflation, their dollar is just not getting them what it once used to. Bloomberg polled 38 economists from December 12th to the 16th for the latest survey. High inflation and aggressive rate hikes from the Federal Reserve Central Bank are leading to widespread fears of recession hitting next year. Nearly 9 out of 10 Americans said they're concerned about a recession, while 2/3 of U.S. voters last month said the country was already in a recession. 9 out of 10 Americans are anticipating a recession, right? We should all be thinking about that as well in our business. When you have a business, a product, a service for sale, you have to ask yourself, am I selling something that people must have? If it's not a must-have, it's going to get harder to sell as the economy starts to turn, right? And so we all should position ourselves for that. The annual inflation rate decreased from 7.7% in October to 7.1% in November, and a sign that rate hikes from the Fed appear to be working. The Federal Reserve also eased up this month, slowing the rate hike to 50 basis points after 4 consecutive 75 basis point increases this year, but the Fed will continue to raise rates so long as inflation remains above the target goal of 2%. Some fear that hikes will lead to job losses and cuts into healthy consumer spending. The Biden administration points to the current levels of low unemployment and strong consumer spending as a sign the U.S. will not enter a recession. Well, it's very fascinating to me when they want to get inflation to 2%, but gas costs are skyrocketing. More restrictions, regulations that were implemented over the last 6 months to a year overseas. Many of the situations, these protections that came into place make things much, much more expensive to not only produce and distribute, but for people to actually consume. Everything's getting much, much more expensive. And so because of that, how can you get inflation down to normal rates of 2% when everything else costs much, much more, right? It seems very, very unlikely. And I personally think that it's more likely that Jerome Powell goes overboard and that the economy really steps into a big problem. Even if they pivot, let's say they pivot in Q2 or Q3 of next year, what is that going to do? I personally think it's going to be a very big sign that people can't trust the dollar. And I think we're going to start to see a lot of people moving outside of the dollar, looking for ways in which they can hedge themselves from the global reserve currency. Because if they are getting a big signal that the dollar is no longer what it once was, we're going to start to see the dollar really plummet in value. And that, I think, the Fed really doesn't have many options. If in fact what they do is they do pivot, we are going to see real big change coming to America. We might see a small jump in the economy, but what we're likely going to see over the next 6 to 12 months after that Fed pivot is going to be devastation. And we've always seen that. We've seen that in past recessions with Fed pivots. We've always seen this. They must continue during this. And even if they don't, there's no easy way out of this. So all investors should pay close attention to this. I personally think 2023, 2024, things are just going to get so much harder. So I think there's going to be massive opportunity, though. I do believe that this isn't one of those situations where it's like, oh, there's nothing you can do. There's plenty you can do, because 99% of the general public, they're going to likely ignore what's happening. They're going to say, okay, it's not a big deal. It's not going to really matter. I'll deal with it when it comes. I'll enjoy my moment. But right now, it's the people that are getting smart, getting prepared, saving money, positioning themselves in a place of strength where they can weather the storm. Those people, they're going to have the opportunities to invest. They're going to have the opportunities to expand and grow when, the general public simply isn't doing it. It's unfortunate, but it just is the reality. We look at what's happening with the real estate market, for example. This is a really clear indication of what we've saw the last couple of years. You look at 2020, 2021, house flippers were making so much money hand over fist. A lot of people in the real estate space were making so much money. It was because the cost to borrow money was so inexpensive, right? They were able to borrow so much money, it didn't matter to spend an extra $25, $50, $100, $150,000 for a house. And so for a house flipper, that was dream come true. But for now, looking at all these Americans, I read a survey the other day, over 250,000 Americans that bought homes over the last 12 months are now underwater. So we start to see the rising cost of interest rates, and we start to see how this is going to impact it's going to be like a house of cards, dominoes falling over the next 6 to 12 months. We look at the auto market. The auto market's seeing the same thing. It's really unbelievable, because I was also looking at another article where they were saying that 1 out of 6 Americans have an auto payment over $1,000. 1 out of 6. That is unreal. And the average car payment is $741. It's a 26% increase from what it was in 2019, the average auto payment. So we start to look at all this. I personally think we're in more debt than we've ever been in. As the Fed continues to increase rates, it's going to get more and more expensive to service this debt. And more people are going to go from that 9 out of 10 Americans are expecting a recession to almost 10 out of 10. And then we're going to start to see more people saying, it's not going to be a traditional recession. It's going to be a depression, right? This is what's ultimately going to happen. But during these times when you make all your real money, I'm reading a book currently right now, and this book, it's from the CEO of Carlyle and Carlyle Group. They have billions and billions of dollars in assets under management, and they interviewed the founder of Oaktree Capital, and he said the most money that he's made and deployed in his career was during March of 2020, when the world came to a halt. There was so much opportunity that they deployed so much capital and have seen immense returns on that money. So this is what I think is happening. I think we're going to be stepping into that moment where you could do the same thing, right? You don't need billions of dollars to do it, but you do need some money, a game plan, strategy, right? So if you need, a game plan strategy, you want to learn a little bit more about, potential solutions, you can go to useitorsloseit.vip, today's paid video sponsor. Drop your comments below. Hit the like button. Subscribe here. Subscribe also on my second channel. It's an interactive call-in show and a podcast. And LinkedIn, Twitter, Instagram, and TikTok up in the banner for short form content. What do you think about this, though? I'm really curious. Do you think that it's a coincidence that some of the wealthiest people in the world were net sellers in 2020 and 2021 when the general public was buying, and now the general public is getting more and more concerned, and the wealthier, they're just sitting on billions of dollars? Remember 6 months ago, 8 months ago, Bill Gates took a $500 million position to short Tesla. And now we look at Tesla's stock, it's plummeted greatly. I was reading something the other day as well that he already made like almost $250 million just in that short position. And back then, people thought that Tesla was going to 5,000, right? They are so optimistic about Tesla. But the smart people in the room, they know what's happening, right? And they're all getting prepared for a reason. Drop it below. Let's have a conversation about this, and I'll catch you guys in the next video.